Hello guys, welcome back. Today's Tuesday, a bit of a rainy day here in Sydney and a little bit of a, I would say, danger going in Queensland with the cyclone Alfred. But we're not here to talk about that today because that will definitely, of course, have some impact into the economy, but not immediately. And the other point is only if that actually hits that area of Queensland, Brisbane, Gold Coast, that region over up from Sydney. So it's very far away from Sydney in a sense. Hopefully it doesn't, but if it does hit the actual land, that's going to be a big problem for the economy, facing, you know, the whole reconstruction again of the small commerces and small business in that area. So today we're going to be looking about the CPI. So CPI from Europe came in a little bit hotter than expected, but below the previous. So how will this influence the euro? And what is actually influencing the market? Because we just saw again Bitcoin dropping more than 6% in less than 24 hours. So we saw Bitcoin dropping 20% in less than pretty much a month, then going up 10% in less than 24 hours, and now dropping at 6%. So things are getting very, very crazy here, right? So before we go any further, guys, just a few reminders. Today, we're gonna have the webinar from 5 to 6 p.m. Australia time. So you're not yet on the Telegram, I would highly recommend, because that's where I send the link and the reminder a few minutes, a few hours before the the webinar begins. So to join, it's very easy and we don't charge you anything. Just go to the description of the video and click on the link to join us now on the Telegram. And of course, make sure to like this video, subscribe to the channel, and send this content to your friends. This helps us to grow and help your friends and help you to YouTube get more content like this to you. Now, let's get to the point. We saw euro dollar having a little bit of, I would say, moment of glory, if I can say that. Euro dollar is up at 104,800 now, all the way down from where the week on Monday opened at 103,840, around that level. So it's pretty much 100 pips move, and that's pretty good. And that's done because of the CPI, first thing. And second thing, of course, the US dollar has been weakening a little bit, okay? So we saw the DXY, all of the gains pretty much that DXY made on last week, on the end of last week, going all the way up to 107,600, around that area, now dropping back to 106,500, 600, around that area. So again, yes, is the strength of the US dollar controlling and the weakness of the US dollar controlling the whole market? I would say so, because when we look at Trump at the moment, anything that Trump says, it has a huge collapse in the world. It's not only on the US dollar, it's not only on the US economy. It has a whole rip of effect going to NASDAQ, going to the stock market, S&P 500, US dollar, even in other currencies like Australian dollar, Canadian dollar, Mexican pesos, China yuan, Japanese yen, US dollar, and a lot of other ones. So we should be paying attention on what Trump says. Second point, again, coming a little bit, you know, giving a step back, we saw the inflation on Europe coming at 2.4% for the CPI year over year, from month of February last year to month of February this year, so last month. Can't believe it's already March. Things are going very, very quick. So the consensus was to be 2.3%, and the actual came in at to be 2.4%, so 0.1%, a little bit higher than what was expected by the consensus. Did this influence the market? Well, in a sense, yes, but the underlying influences that are happening at the moment is the Trump, is what's going on in USA, and it's the data that is coming out from USA. So we did have today as well, the ISM manufacturing PMI and the S&P global manufacturing PMI, and a little bit of a mixed data, okay? So the S&P global manufacturing PMI came in at 52.7, so higher than what was expected for 51.6, so pretty much 0.1 higher than what was expected. And the ISM manufacturing PMI came in 0.3% lower than what was expected, coming in at 50.3 and the consensus was 50.6. Now, that's the question. Will the US dollar be relying more into the Fed from that where, because if we look to Biden administration, that's exactly what we would be looking to trade. We would be looking to trade data from economic data, and then we would be looking to trade the central bank. Now it's completely different. It's another game. And I was talking to everyone here in the trading floor. The game is much more fluid, is much more faster, it's much more changing, it's quicker, and every day is a different thing, and we should be paying attention on pretty much all the other asset classes. So it is different, okay? So yes, we will have some impact from the data point, but we will have much more impact from what Donald Trump says and what Donald Trump imposes and what he gives in his speech from other countries and other presidents around the world, as he did with Zelensky. That I will be covering that topic tonight on the webinar. So I hope I could sort of explain what's going on the market on this Tuesday, a bit of a grey Tuesday here in Sydney, but make sure to join on the Telegram and join me tonight, well, this afternoon, 5 to 6 p.m, where I will be diving much more deeper than what I just did. So guys, thank you so much. I hope everyone have a beautiful day, beautiful trades. Be always cautious, okay? There's a lot of risk and volatility in the market at the moment, so use risk management and know when to stop as well. It's a good tip I would suggest. So I see you tonight, or I see you in the next video. See you guys, bye bye.